All right. Hey, good evening, everyone. This is Brad Pham, your CEO, president of OIC, and today I have the privilege to host our Infinite Talk, and it's a beautiful Friday. And as you all know, we've been doing our Infinite Talk again, and today I am fortunate I get to be the host, and the co-hosts that are going to be with me, the panelists, are going to be Mary Grace. Rain Rubio, and Christian Collada. Collada. Christian Collada. Sorry, Christian. And so we today's topic is going to be market and investing. And so this is a pretty fun subject, obviously, because as you all know, it's the industry that we're in, but also at the same time, it's been a pretty turbulent market. As you know, in the month of March, on March 23rd, we had some of the lowest times that we had that we've seen in a long time since the Great Recession. And since then, the market has pretty much bounced back. But the subject that we want to really discuss is what's going on with the market and just some experience on investing. Because right now, if you look in the economy, today, it's the job report was posted where 20.5 million jobs were lost in the month of April. And unemployment rate actually jumped from 4.4% to 14.7%. If you understand that number, post-world, I mean, you're talking about World War II. After that, this is the record-breaking unemployment rate. And then you look at the Great Recession, and the Great Recession, we had, I think, the highest month was about 800,000 people who got laid off in a month, and unemployment rate was roughly about 10% in October 2009. But the big question mark right now is how come the market's doing so well during a time like this when there's 20.5 million people who just got laid off in the month of April? And so we want to kind of discuss a little bit of some different subjects about investing, our experience, my partner's experience here, what they've been doing. As you all know, if you've turned on, if you watched anything with the market today, it's doing very well. And so a lot of people who've asked me or had a conversation about, Brad, what is it that why is the market up, but the jobs are lost? And a lot of people don't know why. People look at the market right now as very bullish, but at the same time, how could the market be bullish when 20.5 million people's jobs are lost? I mean, oil is up, the S&P 500 is up, the Dow Jones is up. And last week, I think it was Wednesday, we had one of the most record-breaking days in the market since like 1980 something, 87. And so when you look at it, how is it in the world that we're experiencing something like this currently today? And so we wanted to kind of talk a little bit about the background investing in a market, but I want to bring up my business partner, my buddy, Christian Collada. And as you all know, he was on last week's Infinite Talk. And I want to have him kind of share a little bit of some recap of what we did last week and just kind of talk a little bit what happened here since last week to now. So Christian, man, I just want to pull you up real quick. And could you just give us a little bit of a recap here?
Hey, Brad. Yeah, Christian here. And I just want to say welcome for everyone who's tuning in. I'm glad to be back here in Infinite Talk again. And I think we had a great conversation from last week. And, I think this global crisis, this global pandemic, nobody really predicted what was going to happen. And we talked about, one of the worst crashes since 87 back in March. But you can see how right now it just, bounced back. And we talked about, the job losses, record breaking job losses. But that's the reason why I think right now it's really a good conversation to have is people are talking about investing right now. If there could be a market crash like this, but the market, is holding up, I think a good conversation for Infinite Talk, just like you mentioned, is what opportunities are available right now, especially in the financial industry. So I just think that right now there's a lot of opportunity. That's why a lot of people are tuning in right now. But I know you mentioned what our experience is in investing. I mean, just me personally, I think I've done a lot of um, being in the financial industry. Is I've done a lot of index strategies where there's actually potential for growth, but really minimizing the risk is. And I think that's a really good strategy for a lot of people, especially for a majority of Americans who really can't afford to lose money. And but also at the same time, I think there's a lot of opportunity for educating people on how the market really works. So I just think that if it's hard to take advantage of this time and this opportunity if you don't know what the heck's going on. But I think this is a good topic that we can actually start, Brad.
Oh yeah, I mean, let's have that discussion. What is everybody's background in terms of investing? What are your thoughts about it from a personal experience? What is everybody's thoughts? I mean, I know Christian just shared a little bit here. Rain, MaryGrace, what are your thoughts?
Hi, everyone. Well, my experience before coming into the financial industry, I had zero experience. Even I did have, all I had was a 403B before when I was a teacher, but nobody sat down with me, took their time to educate me exactly what it was. Nobody asked me what my goal was. They pretty much, told me to sign here, sign at the X, sign. And I had this plan, not understanding what I was signing for. I just think that, especially in my background in the teacher field, a lot of teachers don't know what they're signing up for, but they know it's a plan. So fortunately, after I came into the financial industry, I started learning more and more about it, and it takes time. It's information for sure, but man, I wish I knew this information before I even got started.
Brad, I was in the industry very young, 97, I think I was 20. And back then, the market was just phenomenal. It was a dot-com era. So it's a little bit crazy if you didn't want to invest. And then I get licensed in 99, and a year later, or not even a year, Y2K happened. And then 9/11 happened. And that's when I realized that what goes up comes down. But because of my young age, I knew time is a factor because you have to take risk in order to have a lot of gain. But at the same time, it didn't make sense to lose money when it's not in your control. So, fast forward 2005, we were starting to get introduced with the index strategies and understanding that most clients they couldn't afford another market loss. And thank God that you are willing to learn what's out there, not just to say yes, money is in the market, but what if the market tanks? And sure enough, what happened after 9/11 repeated in 2008, and most of our clients never lost money. And so, even for me personally, my husband and I got married in 2007. We bought our home, and there were certain strategies that we got in our home with little or no down payment, so we could actually preserve our cash reserve because my husband lost his job right when we get married. And imagine if we put 30 to 50,000 down in a home, what would we do? And we got pregnant 4 months after we got married in 2007. So seeing that cycle, and we realize history repeats itself, and here we are, 2020, even worse than what we experienced. So I think from a career side, having that investment experience and allowing people to understand, yes, if you want the gain, there are risks, but if you want no risk but some gain, we have options. So I really appreciated coming. I think time was on our side, but at the same time, I understand that people shouldn't lose money anymore. And it broke my heart to see some of our investments because although we have a very diversified portfolio, I saw in the 401k of my husband, we lost, you know, within that 1 month, but it bounced back. And even with my experience, he was panicking. I'm like, honey, it's going to go up. And I think just knowing the cycle and that history repeat itself, it gives us peace of mind that the fact that we're young. So Brad, I just embrace this whole 20 years. It's like worse than the Great Depression, but it's a learning cycle, and it allows me to really do my part, knowing what's best out there, not just for us, but what we can do for the consumers.
Well, you know, our the crowd that we have on today is obviously we have a lot of people from our company, and we probably have some random guests who might be listening on right now. And when we think about investing, automatically most people's thoughts is they want to get into the equity market, they want to invest into stocks, or they right now they say, oh, their neighbor might say, hey, you know what? I'm buying this stock XYZ and I'm paying this amount. And then all of a sudden, everybody wants to get into the stock market because they think this is the best time. But what I see, because I've been in the industry now, I think since 2003, but not only being in the industry, I'm a huge personal investor, huge. I mean, I've been in the market for a very long time, and I've done all sorts of strategies from buy and hold strategies to active trading to whatever you can think of. And just like Christian mentioned, into the IUL. And what I've seen is a lot of people who try to dip into the market, they most of the time they get into the market, they truly don't know what they're doing, and they lose a lot of money. And what happens is that then they get burned and they never want to get involved with the market again. And so my opinion is why people tend to, when they get into the investment market or when they start getting into investing, and they don't really ever want to touch it with a 10-foot pole ever again, is because they don't really have a strategy. And one of the things that I've always preached about when it comes to investing or saving for your future or whatever it is that you have to have a certain allocation in your portfolio that has that kind of offsets the risk. Because I think the challenge, human nature, most of us, we tend to want to try to bet big, bet large, and try to make the big return. It's kind of like the lottery thinking. Mm-hmm. And that's where people, they don't understand when they get into the market that strategic, experienced investors are taking advantage of those people. And so we've talked a lot about y'all's experience and how long y'all been involved with this industry, but what have y'all seen, in your opinion, why do some people make good money and why they don't? That's just my opinion on what I see, why some do, why some don't. But I mean, I don't know if any of y'all have maybe some other experience that you might see that you want to share.
Actually,
Brad,
I wanted,
yeah.
Go ahead.
Go ahead, MaryGrace. Ladies first.
I just wanted to say that it all boils down to emotion, Brad. People gravitate to what they're being fed. So emotional investors actually earn much less and lose a lot more rather than strategic investors that's in there for the long term with the right strategies. And what the news gives us really hurts a lot of people if they don't weigh out the consequences.
Can I go ahead, Christian?
Okay.
Well, you asked why do we think that people make good money from investing, right? I think it comes down to being money educated, understanding. I think it's just really understanding what's suitable for them. If they're educated, because there's so many plans out there, but really understanding their goal, and I think every plan it's suitable based on age, like, because you can't put somebody who's probably 20 and someone who's 60 into the same plan. It might not work for them. So I think that if we educate them properly, or somebody who takes the responsibility of getting educated and understand, like, hey, you're going to invest, when are you going to need withdrawals, understand the risk tolerance, knowing their objective for investing, and having the direction for the right plan for them. And then unfortunately, like MaryGrace said, sometimes it's hearsay. Like, there are people that I know that, a friend or a family member tells another person, oh, you should do this, or oh, you should do that. Maybe it works for them, but it doesn't work for the other person. So everything is education, because at the end of the day, they can lose it all.
Mm-hmm.
Yeah, and I think that's great, Rain. Education, really huge factor. That's why when I got into the industry, I got into the industry to really know and understand it first. And I think, Brad, the reason why some are more successful than others, I mean, to me, it's really discipline and consistency. And I mean, you look at some of my best clients, when I look at them, they're just disciplined with their saving. I mean, we all say like diversification. The ones I see successful are, even at this time, COVID-19. The ones I know who are not panicking right now are my clients who have built a good emergency fund. I mean, they're not waiting. I mean, last week we talked about, a stimulus check and all that. I mean, they're not having to count on the government for their groceries this week, because they've been disciplined when things were good, when they had a paycheck. And don't get me wrong, I mean, when I say discipline consistency, I have clients who make household income of, 40, $50,000, but because they're disciplined in how much they actually save every single month, and they're consistent, they're successful. I mean, over time, they're able to build up, some good cash reserve, some good savings, and I know, over time they're gonna continue to save for retirement.
I when I look at that, I think just to kind of nail down on what both y'all or what all y'all said was about the education, about the emotion. The emotion is what really kills everyone because they lack the education, right? And I think when you want to dip into the market or you want to invest and you want to get involved with it, because if you look at it, most people's experience whenever they think about investing, the only experience that they probably have ever had is their qualified plan. If it's their 401k or their 403b, and when was the last time they even looked at it? And then all of a sudden, because the market's like this, people want to jump into it. What's y'all's thoughts about people who are day trading or getting into forex or doing cryptocurrency or any of that type of active management? What is y'all thoughts so far in your experience on how people when they start talking to y'all, what do you guys see as a whole collectively?
About trading?
Hmm.
Yeah. Uh, I think people need to understand the difference between what trading is and what investing is. That's for sure. I mean, I don't trade. I don't trade honestly, but I do hear a lot from clients and family, and I read a lot about it. But I know that I think it's very important to know the difference again between the two, because I mean, with investing, it's all about buying stocks and long-term goals, right? And then stock trading is about buying and selling stocks for a short-term profit. And I think with a focus on share prices, I mean, I don't know about you, but I feel like it's safe having to keep a constant. I mean, I don't feel like it's safe that you have to keep a constant eye to watch the direction of stock or how you have to move it and how far trader profits go from there. So I think that if you're really responsible and you have a high risk tolerance and you're educated again, um, do what works for you. But I mean, you have to be educated and you have to be aware and understand the risk for it.
Right. And my experience, Brad, with that is this is I and this is just my personal experience. A majority of the ones that I talk to are in day trading and cryptocurrency, foreign exchange. I mean, I know some people who this is their career and their profession, and they're very successful. A few handful who are very successful at that, but there's some who try to dip into it. Young millennial, they just want to be cool. And I see it, and I ask them questions like, okay, how much do you understand? And sometimes I get a feeling like, are you doing this because you really want to run a business, or you just want to be cool and you want to be hip? I'm investing, I'm day trading, and it's a get rich quick scheme. I think I see that's a danger, Brad, that I see even like a lot of millennials try to get into that because it's cool. But without proper guidance and understanding, it is very dangerous, is my personal opinion.
So
I
Brad,
mean, yeah. Go ahead,
oh,
Megan.
I was just gonna say that, I think we need to clarify there's a formula to be wealthy, and it is time plus or minus rate of return minus inflation minus taxes that will equal wealth. But what we've been taught too is there is an infinite wealth. where you can have growth, safety, tax advantages, and protection. When you differentiate the two, I think in the long run, people want to be infinitely wealthy, but because they have very little time, because I'm seeing the people that's doing this is not even the millennials. From my experience, I'm seeing a lot of my senior markets that have lost so much in 2008 or don't have enough time because they started late. They're more of like taking more of a gamble. And it's very sad because this should have been taught to them early on, but they're learning it much later. So when push comes to shove, sometimes they take more risks than needed. So it does pay off, but you cannot take too much risk and risk it all. Because I've seen many people very successful in it too.
Well, I would have to, I want to share y'all my opinion onto day trading. It's exactly what Christian was mentioning. I find a lot of people, they tend to want to be cool, I guess you can say, and say they're trading. And I want people to know that it's not cool to sound like you're a trader. Okay, well, that kind of sounds kind of funny now when you think about it, right? It's not cool to sound like you're a trader. But anyways, it's not because I can spot a rookie from a mile away. Because first of all, to day trade, there are laws that are implemented by FINRA that says that you got to have at least $25,000 minimum in your account to be able to even day trade. And if you don't have that, you can only execute so many trades per a 5-day period. And so whenever I speak to some of these young guys and they're like, oh yeah, I'm day trading, I'm doing all this. So I said, oh, you must be having a lot of money, at least 25 grand. No, man, I only have 10 grand. Like, come on, man, let's not lie to me, okay? Like, hey, let me share you. Oh, sorry, my notes has Mickey Mouse on it. I have to print all this stuff for my kids. It's funny. I'll print out Mickey Mouse, and all of a sudden my kid's like sitting there near the printer, and he's like, Mickey. But anyway, sorry, I don't mean to distract y'all. But whenever I look at day trading, I don't see anything wrong with it if you're properly educated. But if you're going to get into the game of day trading, you better get ready to lose thousands, tens to 20s to 30s and 40s to thousands of dollars before you actually really make money. I mean, and that's just the honest truth. When I got into day trading, it's like you can hit it big, and there's days that you can lose a lot. And you have to really understand that there's strategies that must be in place. Me, for example, if I'm going to trade, I need to have a long-term strategy where I make sure that my kids are taken care of, my family is taken care of, my retirement account is taken care of before I start all of a sudden putting all my eggs into one basket. And so if I'm going to day trade, I got to have that safe bet. And the IUL, to me, in my personal opinion, is that safe bet. So when I do the IUL, I also have my buy and hold strategies. And so my buy and hold might be like, for example, I bought Tesla a long time ago. I've held onto that sucker for a very long time. And as if you guys know, Tesla is way up there, plus $800 plus right now. And so what happens is my wealth starts growing. And when you invest into certain stocks, because you created enough money into a long-term bet and you start having buy and hold strategy, you can start collecting dividends, which you can live off of that too, which can be an income for you. And so whenever you make a lot of money, we have to have the thought to make more money with our money. And that's how my thinking has always been. I dabble into day trading, but I'm going to tell you, when I dabble in day trading, I have a very 70% secured portfolio already that I don't have to worry about. And so the thing is that when people talk about day trading, it's too many rookies getting into the game. And I don't mind that because I make money off those rookies because you know what? I sell high and they buy it high and they don't understand that. And that's where it is when you have expertise, like experts that are investors, they come in here, they start taking, they know the system, there's a high volume and they're in there and, people are chasing the money and the guys that are day trading that has experience, they're the ones that's reaping all the money. So I want to encourage everybody because the subject gets brought up by day trading all the time, especially in a time period like this. If you're a rookie, and you don't have enough money, don't do it. Play a safe bet. That's really what you want to do. And that's why when you think about it, how hard do we work for our money? And that's why I want to transition on this subject is what Christian was talking a little bit about, like qualified plans, 401k. He was talking about IRAs. Guys, what's y'all's thoughts about qualified plans, retirement accounts, IRAs, 401ks? Do y'all think it's a good bet? It's a bad bet? Should people do it? What are y'all's thoughts on it? I mean, is it for everyone? Because whenever I talk to people, being in this industry for this long, and sometimes I'm like, yeah, do you have any investments? I got an IRA. Okay, so what does that mean? Oh, I'm set for life. But your IRA hasn't yielded you at least, I mean, it's yielded you like 1% in 50 years. Come on, man. So what's y'all's thoughts on people dipping into different retirement accounts?
Well, here's my thoughts, Brad. On here's my experience just dealing with, especially we're in the industry with clients. Is that my thoughts are, I mean, 401k qualified plans. If you've got matching from your employer, they're matching 5-6%. My my personal opinion is take it. It's free money. But anything outside of that, the question in my mind is that do I really want to put money in something like a 401k and an IRA? Do I really want to put more money when, yes, I'm not going to pay taxes on my contribution today? It helps me today. But when that money doubles and triples later, if it does, I'm going to get penalized for it, or I'm going to get taxed for it. And I mean, I look at COVID-19 right now, where we're adding another $2-3 trillion in US debt. I mean, who knows how much more? And I'm putting in the risk where how much taxes will I pay on that money later? So see, in my mind, that's what I'm thinking. It's like, would I put more money? And I'm not, like I said, I'm not talking about 401k that's being matched, because that's free money. But would I pay another 5%, 10%, or I see some nurses, engineers max out their 401ks because they don't know anywhere else to put the money. And then when you ask them, do you know that you can't access this money? And they say, I thought I can. Well, they don't even know they're going to get, a 10% penalty if they need their money, before, 59 and a half years old. So those are my thoughts on, IRA, is that do I really want to put more money into something that I can access, and I'm going to pay taxes more later? That's why I always talk about, hey, you have to look and understand that there are other different options, especially tax advantage options like IULs and other financial solutions.
Yeah, I want to ask a question to Rain, if you don't mind, Rain and MaryGrace, because
Sure.
I want to kind of give this a different spin on these retirement accounts. What's y'all's take on the retirement accounts? Like, for example, Rain, you come from a teaching background, and you and MaryGrace, y'all are the leaders of the WOIC, leading the woman pack. What's y'all's thoughts with ladies when you'll come across them, and teachers, for example, in education in the public sector? What do you guys see, or you ladies see, in terms of their understanding, how they feel about it? How do y'all, what kind of advice do y'all give to them whenever they're sitting there, they're giving their qualified plan, 401k, 403b to y'all? And what do y'all talk to them about? What do y'all look for example?
That somebody better back them up consistently, and not just that one time, to look at their portfolio. Because every single teacher that I've helped has either, for example, I have 3 teachers, okay, that either one, she did retire early before 59 and a half, and the HR director suggested to her that she withdraw her money. So she got taxed and penalized. And then I had another teacher that actually had to take a medical leave before she was 59 and a half, of course. And during the process, medical leave was a little bit longer, and she was so certain that her money was safe. And what happened is 2008 happened, and she lost 38, I believe it was 38% of her money, of her 403b, and also her 401k. And even my family member, my aunt was a teacher, and same thing. I mean, everyone had the same story, and it just all boils down. I mean, if you're going to, my advice is, if you're going to seek into a plan, make sure that person who's helping you is going to commit to you to make sure you hit your goal year to year, to build that relationship with them, because it's just not a one hit. I feel that every year, everyone's situation changes. So I think that every year, you should, if an agent doesn't reach out to that person, well, she better reach out to them and sit down with them and make sure everything's going good. So always a revision, always a look, always to have a backup. And also know that, sometimes 401k might not even really work for them, because they do have to understand there are a lot of high fees, admin fees, and, just all these extra fees. So it's just important. I come back to it, just be educated and know your options, like Christian said.
Yeah, Brad, I'm glad you mentioned this because as females and as a female advisor or a representative or, you know, um, been in this space, it's so it, it's so hard to see that women work equal as their male counterparts, but one, they don't even get paid equal. And I'm not going to go in that topic. It goes not just for teaching, but every profession, sports, etc. Because it's almost for a dollar a male earns, that female only earns 80 cents. And if they don't even understand how that money is being invested or how it works, it's almost $1 million less when they retire. And I see this not only from the teacher standpoint, but especially in the healthcare professional, because that's how I have been helping a lot because they're just so committed to their profession. And they assume because they're contributing, their company is having their best interests at heart. And it's very heartbreaking when one day need the money and they cannot access it without penalties and fees. And worse, the market drops, and as it has the last 20 years, 3 times, that wipes any gains they have. So they're almost starting right from the like right from the starting line. So we make it a passion of ours to educate those female because they would always say, my husband handles that. And that's another topic. Women always outlive their male spouses. And if they put that responsibility on that male husband that already has all that stress, how many times have we seen they lose the husband and they're lost? They don't know how to navigate. So we always say it's important not just for your husband to know, but it's important you both should know. So I think we're doing a good job, Brad, but there's still so much to be done. And thank God we're having more representation, but it's reality. The women are really being left behind and they're going to inherit most of the wealth. And that's why there's such a gap and there's such a need for women uh, educators to reach out because we can relate. You're muted, Brad.
There you go. Sorry about that. I have my son. He's walking towards me right now. Um, uh, so I completely agree with you because when, through my 17, 18 years of experience in this industry, I sat down with ladies where it's crazy. I mean, I disagree with you on one thing is that y'all don't work equal as men. Y'all actually work more than men because not only you're working from the home front, worrying about the children, because I mean, the mental space for a man with their children is a lot different than a woman, from a mom to the children. It's completely different. And the thing is that you're consistently thinking about your children. If you have children, right? You're thinking about your children, or even if you have children, you're probably thinking about your parents, and you're thinking about your siblings. And men tend to be more aggressive, more independent, where we're just like, nah, you know what? It's all good. And so what happens is that you're already thinking so much about what you're going to do, when you come home, how to take care of the kids. Then you're working equally, and it's true. The pay is not equal at the end of the day. You look at it like, for example, the women's soccer team. The court overthrew it where they're not going to get paid as equal as the men who play soccer. And I mean, there's a lot of opinions that we can go into about that. And that's a whole infinite talk session another day. But the thing is that at the end of the day, you are completely right. And when I look at it, it's like, it's crazy how many people they put money into some type of plan because ABC company says, hey, we have a 401k, we have a 403b. They're like, oh my gosh, I got to invest into this account. And they're going to put all their hard-earned money into it, invest to the very top, like as much as they can. And they don't even realize that they're yielding maybe like less than 1%, or maybe their portfolio is more involved with the stocks of the company, and their company's not even doing well. And so it's like, it's crazy how many people are so uneducated on understanding where their money is at, how to make their money work. And so I completely agree with what y'all said. Those are some very fantastic tips that y'all just gave. And I know Christian deals with the teacher market, always deal with the 403B. And my heart goes out to those teachers because they really, truly do not understand what they have. I mean, you know, I always say, like, these advisors and agents who go into the public sector, they're like a hidden quitted agent. You know what I mean? They go in there and they're like, peace out. You never see them like 20, 30 years later. And all of a sudden some sharp dude like Christian has to appear on their footsteps and be like, I'm going to save your life with this ERP program. You know what I'm saying? So it's crazy what I see out there in the industry. And I think that the problem is that people really do lack education and they need more of it. And there needs to be a higher discussion about money. Even though we don't like to talk about money, you got to talk about money, because at the end of the day, if you don't talk about money, you don't know how to make money work for you. You're working for money. And that's the thing, is that people, they don't get it. You got to understand it. But anyways, you know, I could sit there and talk about that probably for another 50 hours. But I want to transition to another topic, which is the economy. As you all know, I have a lot of opinions about the economic situation that's going on. I mean, as a CEO, as an executive, as an entrepreneur, as a family man, as an immigrant, I have a lot of opinions about it. All right. And for some of y'all that might not know, we are taking live questions the last 10, 15 minutes of our segment. And if you have a question, please put it on the YouTube. I will be reading those questions and I'll be asking it live. But I want to talk a little about the economic stage. What's y'all's thoughts about the economy today, the pandemic, in terms of where is this going after this whole thing? Like, what do y'all see with this economy? Do you see it rebounding? I mean, do you see it? Do you see all of a sudden there's 20.5 million people's jobs were lost, that all of a sudden it's going to be dandy all of a sudden? Because people don't get it, is that by July 31st, they're cutting federal unemployment. That $600 a week check is gone. You're only going to get the state unemployment. That's it. And I guarantee you, in my opinion, that the economy is not just going to say, hey, you know what? It's like a rubber band. You know what? We're just going to bounce right back. I don't see that happen. So what's y'all's thoughts on the economy today?
Hey, Brad. My personal opinion, I see it's a very long road up ahead of us. It's gonna be a while until we really bounce back from this. But let me put it this way. My personal opinion is that my hope after COVID-19 is that we learn the lessons, the financial lessons that COVID-19, when it comes to health, I mean, it's all up to our health officials. What we've learned as far as, being prepared as health and all that, that's I think beyond us. But what we can control is preparing financially. I just hope that after COVID-19 is that people learn to sit down and focus on their own personal finance. Things that we said, retirement is that's like 30 years from now. I don't want to worry about retirement. I can't afford to save right now. I mean, those are things these are the habits I believe that is devastating for America, because now we're struggling to get most Americans are struggling to get a stimulus check. But imagine if an average American actually has 3 to 6 months of emergency fund, and that's a norm, that's a habit. And I hope that also Americans learn from the idea that, look, 60% of Americans only have insurance and benefits through their job, which any day they can lose it. So if you're talking about 24 million people lost their jobs, that means 60% of those, there's over 14, 15 million that do not have any kind of benefits, do not any kind of insurance or protection for their family at their worst time. So I hope that that's what we get. The economy bounces back, but as we bounce back, that we've learned from those things.
You're muted, Brad. Brad, you're muted.
There we go. Sorry. Kids screaming, all that stuff, so I got to hit the mute button. I don't want y'all to hear how we got like a Bloody Mary situation going on here. But anyway, 20.5 million people were filed unemployment for the month of April. But I have a stat here. There's 30.3 million unemployment insurance claims in the last 6 weeks. Rain, MaryGrace, what's y'all's thoughts on that?
Well, Brad, I just wanted to share. I think it's a wake-up call. Actually, it allows, especially in our industry, to encourage everyone, don't depend on anyone else. Be your own business person. Just like when a lot of changes happened with pension plans. Remember when a lot of companies offered that? Then they went to the qualified plans because they're almost telling us, even the government, due to the CARES Act, since Christian already discussed the stimulus package, but you should be your own stimulus package. I think for us to be one of the wealthiest country in the world, that's why we can do this, but it's a wake-up call because it can happen again. Yeah. We're putting ourselves in a position where our government cannot afford to keep doing this. So how will we learn from it? And the changes they've done, even the way people can access their qualified plan, because if they're losing their job, husband and wife, at least they have resources. But if they would have had a 3 to 6 months or even a 12-month emergency fund, when some people, they live, not some, majority of this country, over almost 40% live paycheck to paycheck. And I think that's one of the wrongs we're going to make right because of what we saw just this last 6 weeks. It's a wake-up call.
I feel that we are OICers. I think we're one of the luckiest people because we have solutions for everybody. And with experience with a lot of my clients back in 2008, I'm very fortunate that I have so much great relationship with them that every year I have always encouraged our clients to put more or to add more, and I show them why. Because if 2008 could happen, it could happen again. And history did repeat itself, and now this happened because of the pandemic. And a lot of people, I'm going to go back to my clients in West Texas. I had about 6 clients this past 3 weeks who lost their job, who could not afford the lifestyle that they were already living. And because of the discipline that we taught them, now their policies are actually paying them, and it's protecting them and it's saving them until economy comes back up, until they could get back to their job, until they get back on their feet. But do I feel the economy is going to go up again? It's going to go up and it's going to go down. And, just about 30 minutes before we started, I just read that, I just saw on the news that, if anybody knows about the GDP, I didn't know anything about GDP, but I heard about it and I looked it up, and I didn't know GDP was the gross domestic product, but they said that the probability of the U.S. economy will post 2 consecutive quarters of a decline before April 2021. And I think that right now, I'm going to come back to the solution and everything that we provide to everybody. It's going to happen again one day, and we could save it. We could save people from hurting. So we have a really big duty to go out there and to help people, especially our family.
For people who don't get what's happening right now, 22.4 million jobs were created from the Great Recession. Okay. 8.7 million jobs were lost during the Great Recession. 30.3 million jobs. 30.3 million people filed for unemployment in the last 6 weeks. And then people say, well, Brad, the market's bullish right now, man. You know, the Dow Jones is like up 400 points today. The S&P 500 was like 2,900 points. Crude oil is up. Everything is so great. But Neiman Marcus is filing for bankruptcy. J. Crew's filing for bankruptcy. Nordstrom just announced that 16 stores are permanently closing. You got oil companies who are furloughing workers. You got S&P 500 companies furloughing workers, laying off people, but the stock market's still going up. Well, why is that happening? Because people have to understand how the market works. The market is not a reflection of the economy. It's two completely different things. The market, what it does is that when people have confidence, they put money in there. Well, who are these people that put money into the stock market? It's people who have discretionary income. It's people who have disposable income. It's not the guy that is that's living paycheck to paycheck. So the market does not reflect the economy. 20-something year ago, Brad Pham is not the same that he is today. If this happened to me when I was 18 years old, I am suffering. I am in trouble. But because I've been in the industry since I was a kid, 18 years old, and I've been able to be financially educated, built up a great foundation, built up a great income, have a great business, all these good things, I'm able to do what I can do. And people don't understand is that the only reason the market's going up because right now, COVID-19, everybody's tired of it. Everybody's like, you know what? Let's open up all the states. Let's do all this. So that's why the market's doing better. And people have to understand the difference between a market and the economy. So I have a question for y'all. For those that, you know, if you have questions, please ask it because we're getting down to the last wire, right? But I have a question for my partners here that are co-hosting here today. Is the question that I have, all right, is that what advice would you all give to people right now who are in that bad economic situation where they are living paycheck to paycheck, where they're trying to figure out how to make their next buck, what happens if their line of work, okay, their line of work does not rebound, and all of a sudden federal unemployment's gone, and they have to rely on state unemployment, which isn't a lot. And if you're a 1099 self-employed, you know, you might not be able to even bounce back because all of a sudden the governor of California said, hey, you know what? The coronavirus, COVID-19 was started from a nail shop. So our family has a lot of people in the nail industry because we're Vietnamese, right? So it makes sense. And so they're all now doing their nails, but they can't do people's nails because the governor just said, hey, you know what? Don't go to a nail store. So what happens to these people? How are they going to follow? How are they going to get more money? Federal $600 a month is gone. So what advice do y'all have? Because the biggest sector that was impacted was leisure and hospitality. 7.6 million people lost their jobs. And so what advice do y'all give to these guys right now? I want to ask y'all that $1 million question right now, or $1 billion question.
Hey, Brad. My advice for people who are in that category is my personal opinion, my personal advice: get into business.
Mm-hmm.
Look, America is built. I mean, that's why I'm here. You know, I could be back home in my home country, but you know, this is a land of opportunity where you can actually get in business. Because, I mean, I know we talk about investing. I mean, if you have a lot of money, maybe you get 10, 20, 30% return if you're lucky. But right now is that you find something right now, get into business where, I mean, there's a lot of markets that will actually emerge. I mean, you see it, like whether it's healthcare, you know, find something you can do in whatever business that people will actually need in the next year, 2 years, 3 years, 5 years, right? And find that opportunity. I mean, whether it's healthcare, maybe our industry. I mean, our industry right now is booming. The financial industry is booming. If you're contemplating getting into this industry, this is the best time. This is the right time. So for me, it's get into business.
I agree with Christian. um, if they're strapped for cash, one, there are all these companies, whether it's the delivery or Amazon, there's ways to generate revenue for your family so you can put food on the table. You don't just have to sit there, wait for unemployment. Um, really, and this did not come from me. Gary V, and he's very outspoken. He said the best way right now, people need to look into a network marketing business that they believe in, that they know can help them get started at low cost, but potentially high reward. And I agree with Christian. There's such a need in this space. And it's not just getting into business, it's a career. But thank God with all this COVID, there are changes with even licensing. So that's my suggestion. Get on board with a company like R Infinite.
Yeah, the one question that I have for everybody if they got laid off before is how many more times can you afford to get laid off? Because it's going to happen, and it's something that we can't outbeat. And naturally, because who I am in our infinite company, my answer, my question is come into business with us. Or no matter what business you go into, you better put your heart into it because you can be successful no matter where, no matter what business it is. But with the opportunity that we have now opening up with the temp license is just amazing because I've already helped team members who did lose their job and immediately in 2 weeks they're making money. We gave them a solution to what they were worried about. And once you start making money here in OIC, my tips, my advice to them is one, make savings a priority, get rid of extra costs, get educated. And if you have money sitting in a 401k or anything like that, make sure that you don't leave money in there, move it if you're not contributing there, if you're not working there anymore, and if you're losing money in an account already, please don't leave it in that account. Because yesterday I actually met with a client and said, oh, I'm going to wait till the market comes back up. Well, you know what? If it comes up, it's also going to come back down. So just get educated.
Hey, I have a fun question for y'all. We're gonna make everybody younger today if y'all don't already look young enough, right? So everybody's gonna all of a sudden become like these little children. They don't look like Chancellor.
I am
And
young,
so
Brad.
that's what I'm saying. We're gonna make you 20 years younger. If you had to speak to 20-year-old, or I'm sorry, not 20-year-old, 20-year ago Christian Collada, 20-year ago Rain Rubio, 20-year ago MaryGrace Anasco, and you had 10 grand, $10,000, right? One comma, not two, not zero, one comma. All right, $10,000. What would you do? What would be that advice to you? What would you do with it? Would you invest in it? What investment would you do? What would you do with 10 grand?
I want to say something besides you, Brad. Me, Christian, and MaryGrace, we're all the same age. so, so 20 years ago, I was 18. I'm just kidding. 20 years ago, I did have $10,000 that I blew. I didn't know about it. I didn't know what to do with it. I started thinking about everything that I could buy, everything that I wanted. And in less than 1 week, I blew it. I wish I was smarter about the solutions that we have now. I wish that someone approached me sooner before I was 30 when someone offered me an opportunity. I wish I was just educated. Because if I had that $10,000 and I knew about an IUL and I was disciplined about it, man, that IUL would be amazing today for me. And it's just the discipline. I would have loved to learn how to be disciplined. I wish somebody shared this opportunity with me or even the knowledge when I was 18. And no one talked to me until I was 30. So
Yeah,
I'll
well,
be
for me,
43
Brad,
this year.
I was 20, and yes, we were taught where to put our money, where it can grow, but at the same time, that was half right because the loss, the market risk. And so, if I could go back, really, I would have really looked into where I had no market loss, even I was young, because I saw the drop. I see it even now, even with my husband's 401k. Every time the market drops, it goes back up. But what can we do? If we just the fact that we're young, we let it grow, right? But I would put it somewhere where it would grow. No, it'll be safe and definitely avoid taxes, and there are solutions out there. Even back then, I just wasn't informed until 2005 that those existed.
Yeah, Brad, for for me, so 20 years ago, so I would have been, a teenager back then. But I think I got my math wrong. But I had $10,000. Knowing what I know now, uh 20 years ago with 10 grand, I would put my first 1,000 in protecting my family, just putting a $1 million policy. And because that was or a couple million, because that's my self-worth that I know. And at the same time, the rest of it, I would have put everything in building a very large financial distribution. Because right now I see where this country really needs is education and people who need help with their finances. It's going to be one of the, I mean, they said that the biggest industries, the biggest $1 trillion industries that were recession proof were healthcare, defense, and oil. I mean, look where they are right now, but look at financial. So 20 years ago, I would have built a very large distribution for financial services.
You mentioned oil. People don't understand the energy sector has been going down and declining like crazy. It's down by, I think, like 60% year to date today. But I want to give y'all my thoughts on it. Rain, do you mind asking me, Brad, if you were 20 years younger, used to be in your mama's womb, right? But Rain, could you ask me, Brad, if you were 20 years younger, what would you do with 10 grand?
Hey, Brad? Yeah, I'm going to ask you. If you were 20 years younger, what would you have done with 10 grand in your pocket?
Man, I would have taken that money and blown it. That's what I would have done. You know what I mean? I would have blown it on myself. I would have.
And that's what I did.
Penny. Exactly. But see, that's what I did. And the problem, if I was to go back in time in this, Back to the Future car, and all of a sudden I zoom right back in, I'm like, hey, Brad, what would you do with 10 grand? Okay, stop going to the bar. Stop going with your friends. Don't do that kind of stuff, okay? Don't go to Disney World and go see Mickey Mouse. What you
Don't
need
buy
to
a motorcycle.
Don't buy a motorcycle. That's right. Well, I was only 15 years old, okay? And so what you do is you take that 20 grand and you invest it into yourself. You put every single penny and you put that money into you. Into you. Can you guys hear me still? Okay, great. Because I wanted to make sure that I put the right money into these AirPods too, okay? So you put that money into you. Now, for the investors, do you know where do you put your money? Into the S&P 500. It had 106% return since 20 years ago. Warren Buffett did his shareholders meeting on Saturday last week. And he said, guys, you know what you invest your money into? The S&P 500. Do you know what you invest into? America. I don't know. The guy has $140-something billion stacked in cash right now, and he's waiting to make the next move. I don't care. I'm a smart guy. I look at what smart people have done, and I listen and I follow. And that guy said, invest into America, put money into yourself, believe into America. If you invested into an ETF like the SPY, you would have made some money back. But the problem with investing in a market is that people don't understand is that you gain and you can lose in the negative. But like what y'all said, we have some of the best plans that we offer as a company in this industry from the IUO or whatever it is, and people need to look into that. But I agree with you, Christian. Open a business. It's the best thing that you can do. Why? Because you are the person, you are your best investment. You are the highest yield stock that you can ever have. You don't produce 1%, 2%, 5% in return. You can produce infinite. I don't know where that word came from. Infinite, infinite returns. Our infinite company returns. And so I want to just say is, guys, I've had a great time with y'all. We've talked about the economy, about investing. I could speak to y'all about conspiracies, all sorts of stuff right now. But I'm glad that we were able to talk about subjects that actually matter. And I hope that I want to encourage everybody who's in our company, who's watching this, that please just take the time to understand what you could do with a better understanding of financial education, because the industry, what it's done for me and it's done to my partners here on this call right now today, on this YouTube segment, is what it's done is that it's helped us build a foundation that will last a lifetime, not just a lifetime, but generations. I mean, I don't even this whole COVID-19, I'm not worrying about money. I'm just worrying about how to make more money for the company, how to make more money for my family, how to make more money. And then with that money, we help more people. That's all it is. And so I want to encourage y'all is really listen to the advice that my partners have shared with y'all today and take it to the bank. Take it to the investment firm. Make something happen with it. Take it to your own self and make something happen to it. Thank you, MaryGrace, Rain, Christian. Y'all been amazing today. And I think we had one of the best Infinite Talks that we've ever had, because together we can go infinity and beyond. And so thank you, y'all. I appreciate everything.
I appreciate it. Thank you, guys.
Hey, thanks, Brad.
Bye.
Thank you.
Thanks, everyone.
Have a good one.
Appreciate it.
All right, y'all. See you tomorrow.
Thank you for watching the episode of Infinite Talk. If you enjoyed this, give us a thumbs up. Subscribe and be sure to ring that bell so you'll be alerted when new videos come out. Let us know in the comments down below on what you'd like to hear us talk about next. We'll see you on the next one.